Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It's a Friday. That's one thing to cheer about. The markets, though, not cheering so much. The Nifty is sitting with cuts of around 100 points as we speak. The mid-caps, they actually briefly turned into the green, but back again in the red. Banks also in line with the benchmarks, down around 0.4%.
That's right. Good afternoon, Sonal. And like you mentioned, it's Friday. That's the one thing we're looking forward to. It's been an earnings-heavy week, and the next week too will be dominated by a lot of companies that will declare their results. But we have a lot lined up on the show. Some important corporate conversations post Q2. So let's start off with the top headlines. Stocks oscillate between gains and losses as an eventful week draws to a close. Metals and financials are the big drags, while auto and PSU banks eke out gains. Mid-caps fare better.
Navin Fluorine zooms after a strong set of second quarter numbers. Revenue rises 46%, while profit sees a multi-fold jump. Management has also upped their margin guidance to 28 to 30%.
Shares of TD Power jump over 10% on the back of a strong Q2, where revenue and profit grew over 40% and order inflow rises 45%. The management has also upped revenue guidance to 1,800 crore rupees from 1,500 crore rupees earlier.
Shares of United Spirits rise following a solid set of September quarter earnings, tailwinds from Andhra Pradesh's new liquor policy and an improved product mix and growth.
IKS Health reports a strong set of Q2 earnings, with revenue seeing growth of over 21% on a year-on-year basis and profit around 60%. The management tells CNBC-TV18 that they are still focused on large macro opportunity of unlocking total addressable market.
Those are the top headlines. A lot of mid-cap movers on our radar. The mid-cap index, though, is under a lot of pressure. The advance decline ratio in favor of declines. But this is our special segment, mid-cap movers. We have Hormuz today to take us through the mid-caps that are moving around in trade. Hey, Hormuz.
The mid-cap index may be lower, but the earnings reactions seem to suggest otherwise. You look at Strides Pharma now, 13% higher. It's very close to its 52-week high, which is 972. So 12% higher on Strides Pharma. Intellect Design as well, another earnings reaction. Numbers just came in a few minutes ago. And Navin Fluorine, of course, at a record high, 15% higher on the stock, the biggest single day gain since 2020. Now, there are some other, so I spoke about smaller banks as a theme doing well today on prospects of being included in the Nifty bank. Yes Bank is one such name. Union Bank is one such name as well. Union Bank's numbers were disappointing. The stock was down yesterday. It's recovered that losses and a lot more. It's 5.5% higher on that stock. But there is some profit booking coming in on the metal names. Vedanta reports results in a few minutes from now. Stock at the lowest point of the day. Nalco is down 1.5%. Hindustan Copper is down to the day's low, seeing some profit booking there. Volume stocks doing well on the volumes front. IKS Health earnings reaction 6% higher on the stock there. Wellspun Corp another earnings reaction, but look at Bandhan Bank. The stock is now at the lowest point of the day, 8% lower on Bandhan Bank and on very, very strong volumes. And lastly, stocks that are at a 52-week high. Chennai Petro continues to move higher. It's had its best week in almost 6 months now. Canara Bank is another name that did well yesterday, continues to build on to those gains. And IDFC First as well at the highest point of the day, 4.5% higher at a 52-week high.
Well, thank you so much, Hormuz, for joining us and giving us a list of all of the stocks in the broader end of the markets that are moving around in this session. Well, we'll now slip into a short break. Up next, we will connect with Adil Agarwal, the CEO of Dr. Agarwal's Healthcare, to discuss the Q2 numbers. Stay tuned.
Welcome back. Dr. Agarwal's Healthcare was the first management of the show. It reported a good set of numbers. Profit zoomed 79%. Margins came in healthy as well. The stock, though, is at the lows of the day. So let's understand the business outlook. Dr. Adil Agarwal, who's the CEO of the company, is joining us now to understand the outlook going forward. Mr. Agarwal, good afternoon. Thank you so much for joining in. Well, the top-line growth has been strong, 20%. Can you give us a sense of the breakup between mature and newer facilities, and how many of the facilities are breaking even right now?
Hi, Sonal. Firstly, thank you for having me on your show. Happy to say that, our business has grown 20% compared to last H1. We touched a total top line of 1,008 crores for these 6 months of this year. So totally, if you see our business now, we have a total network of 258 facilities, out of which 239 are in India and 19 are in Africa. Out of these, if you see over the last few years, we've done significant rollout of our new centers. So we have 123 mature facilities, and the rest of them are all emerging facilities. Most of our mature facilities are now profitable. Emerging facilities, if you see the cohorts in the last couple of years, are still ramping up. But as they start to become mature over the next couple of years, they will also start to turn profitable.
Okay.
Happy with the way the business is ramping up right now.
Okay, Dr. Agarwal, at the start of Q1, you had actually highlighted that you intend to grow in this year by at least 20%. You're on track. Are you confident of ending the year higher, in terms of top line by over 20%? And EBITDA margins currently are over 28%. Can this be sustained given the fact that there are quite a few new facilities that are coming on stream?
So Vivek, thanks for that. So we had given a guidance of about 20%. We are fairly confident that the business will continue to keep up with that line of growth. A couple of reasons for that. If you see our business, we have a sizable presence in both the West and the North. And the way our business functions is typically it's a bit cyclical, where in Q3 and Q4 is when you will start to see a lot more patients walking into our centers in especially the Western and the Northern regions. So some of those regions will start to outperform. So we believe with the current growth in our existing base of centers, plus we are adding about 30 new facilities for this year, we're very confident that we should be able to maintain the guidance which we had given for in Q1 in terms of revenue growth.
That is for revenue growth. What about margins, Mr. Agarwal?
So given the fact that, we have been able to maintain the margins with this kind of rampant expansion, we believe that we should be able to maintain our EBITDA margins at the 28.5%, which we've been maintaining for the last 6 months or so.
Okay, so 30 facilities is what you're planning to add in this year, if I got that number correct.
Yeah. Absolutely correct, yes.
Okay, so this time around, what was the contribution coming in from complex surgeries? Because that is an important segment. You do have cataract surgeries, which was up 25.5% in Q1, robotic cataract surgeries. How did all these segments perform in the quarter gone by, and what is the outlook overall for FY26?
So what we've been doing in the last few years is we've been significantly increasing the kind of complex surgery that we've been doing across our system. So now if you see in our business, about 73% of our total surgeries comes from one single category, which is cataract surgeries. And what we have seen over the last 2 to 3 years is the contribution from higher end cataract surgeries, which is basically what we call as robotic cataract surgeries. That contribution has now become 25%, which was at about 18-19% about 3 to 4 years ago. So that is something which we are seeing as we add more high-end equipment, as many of our doctors get trained in some of these high-end procedures, as the brand starts to become a lot more familiar, we are starting to offer some of these options to our patients. And that is what is driving significant increases in your high-end surgery volumes. Similarly, even in terms of refractive surgeries where we operate to get rid of glasses, we have started to increase the contribution from our lenticular procedures. These procedures are what are famously known as the smile procedures. That has also grown by about 11% over last year. So these two trends are actually significantly helping the group, and we hope to continue with this trend by adding more machines and getting more doctors trained to provide these kind of high-end surgeries for us.
Dr. Agarwal, markets are also very keenly anticipating, an update on the merger. What is the timeline? When can we expect this particular merger to be consummated, and what will be the benefit, especially in terms of margins, once the combined entity comes into force?
So Vivek, we have now gotten in principle the approvals from the exchanges. So we will be looking at consummating this merger in the next 12 to 14 months. So the next 12 to 14 months are critical by when we should be able to get this merger done. We believe that we should be looking at least a 1 to 2% improvement in margins once the consumer is done. There will be a lot of efficiencies and synergies we'll be able to bring in. So hopefully that will actually help us improve the margins even further.
Okay, all right. Is there a number to how much higher would the margins be once the efficiencies kick in? What kind of EPS accretion will you see?
I don't have the exact numbers right now because that is something which will be difficult to predict. That will also depend in terms of how the business ramps up and how many of our new facilities perform. But overall, we believe there are significant synergies we expect to unlock post the merger.
Okay, thank you so much, Dr. Agarwal, for joining us and giving us a sense of how Q2 panned out. A lot more questions, especially in terms of expansion, but we'll keep that for another day. Right now, we'll move on and slip into a short break. Up next, we will connect with the management of Rajratan Global Wires to discuss the Q2 numbers. Stay tuned. Welcome back to Midcap Radar. Well, as promised, Rajratan Global Wire is in focus. Remember, the company posted a good growth in profit as well as top line, but margins on a year-on-year basis compressed. Sunil Chodia, the CMD at Rajratan Global Wire, joins us now. Well, sir, thank you so much for joining us. Like we mentioned at the start, there has been a 15% volume growth, despite the fact that at the end of Q1, you had indicated that there were various uncertainties, especially related to tariffs as well as export markets not doing as well as earlier anticipated. So what drove the volume growth? And also, first, you give us a sense of how exactly business panned out, especially in the export markets.
Yeah, so, we had invested in Chennai in a new facility, which is up and running for last 1 year. And now we got major approvals in our Chennai factory from our marquee customers. And we are able to push more volume from that location, which has made a viable capacity available to us. Okay, so this has been possible only in the last quarter. And that is why we are able to sell more. Also, in the global market, we are getting more and more approvals, and there is a good growth in export market also for us.
So, Mr. Chodia, this Chennai facility, two-part question on this. You said in last 1 year it has been up and running and getting you more volumes. How much of the volume growth or how much volume came from the Chennai facility? Secondly, is it running at full capacity utilization? If not, by when will that happen? And would that mean more volumes coming your way in FY26 and FY27?
Yeah, so Chennai facility, as you know, we had invested into 50% of the actual capacity of our plan is to make it 60,000 tons ultimately. Current capacity is 30,000 tons per annum, and we are running at 60% capacity utilization. And we have also decided to now invest in the remaining capacity to make it 60,000 tons. And we are very confident that the next year we'll be able to use substantial capacity in Chennai.
Okay, we got that. So now, we've got Chennai out of the way, but let us talk about the EBITDA margins. EBITDA margins on a year-on-year basis have moderated. Now they're slightly northwards of 13.5%. Street is keen to know, when this can move upwards. What impacted the margins in H1 and H2? Do you have any tailwinds that can aid margin recovery?
Yeah, so if you closely look at the numbers, on a quarter-on-quarter basis, the margin has improved by 1%. Okay. From lowest 12.5% EBITDA margin in the last quarter, we have improved it to 13.6% margin. And this has been possible because of improvement in Thailand business. And in India, the margins will not improve because there is an excess capacity in the market. But for Rajratan, there is a special situation. We are in Chennai, and there is a substantial possibility of reducing our cost. As we improve the production there, our cost will come down. So that is another, possibility of improving margin from Chennai. So in coming quarters, you will see improvement in margin as well as improvement in tonnage from both our Thailand facility as well as India Chennai facility.
So you said there's overcapacity in the Indian market, but still the Chennai facility will allow you to improve margins as costs come down when production increases. So how much higher can the margin be because of cost reduction that you will see? And that 60,000 tons that you said you'll increase the volumes to, when will that come on stream, Mr. Chodia?
So, long term, we see that this business should come back to a 15% EBITDA margin. Exactly, I cannot tell you when it will happen in the next quarter or subsequent quarters. But the normal working will come to 15% EBITDA margin very soon.
Okay.
And sorry, on that 60,000 tons capacity, when does that come on stream for Chennai, Mr. Chodia? Will it happen in next fiscal or after that?
That will be operational from first quarter of next financial year.
Okay.
Okay. Sir, you've told us that Q1 was the bottom in terms of margins. Now, what we want to understand is how has pricing environment been, especially given extremely volatile input costs? And number two, we are short of time, sir. Give us a sense of how the export market demand is panning out, especially in the context of tariffs.
Yeah, so fortunately, tariff has not affected us. It has rather given us an advantage because there is excess tariff on China. And in global market, we are competing with China. And there are good news coming in from our marquee customers in export. So we are getting more and more approval from our multinational companies, whom we have been supplier for many years in India and Thailand. But now we are supplying to them. We have begun to supply them in Europe and
That is what I was going to ask.
North American market. So that is the market which is growing for us.
So, Mr. Chodia, you are saying you're not impacted by tariffs. There are new capacities coming in Chennai, and that is something which could aid margins. 15% volume growth this quarter. What is the target for the entire year? And once the additional capacity comes in, what is the target for FY27? This is in terms of volume growth.
Yeah, so as I have been telling, we will have a volume growth of 15%, and we are close to that number, or we will achieve that. I am very confident. And we have an aggressive business plan for next year. So similar kind of volume growth you can see next year also.
Okay, thank you so much, sir, for joining us, giving us a sense of how Q2 panned out and what exactly you expect as far as the remainder of 2026 is concerned. Well, a couple of stocks on the radar. If you could pull up the stock of BSE, Bombay Stock Exchange, it's been an extremely volatile day as far as BSE is concerned. Certain news reports had indicated and had spoken about expiry-related information, but an immediate clarification was put out on your channel. And post that, have a look at how this particular stock has recovered. It's up almost 2% after being down 4% at one point during the session. Along with that, another capital market play, which is Angel One. That stock too, after significant volatility, has now moved to the day's highest point. On the other hand, certain chemical stocks, SRF especially, has seen selling pressure intensify. That stock has moved to the lowest point of the day. On the other hand, Navin Fluorine, after an extremely strong quarter, is now one of the top gainers, especially as far as the broader end of the markets is concerned. Some of the other stocks, especially when you're looking at hospital names, those stocks are seeing some selling pressure. Max Healthcare, Apollo Hospital, Fortis, all of these stocks under pressure in today's trading session. Important to see, especially what actually transpires in terms of pricing negotiations between hospitals as well as insurance companies.
Okay, some interesting names there. By the way, Lenskart IPO's update, it has totally been subscribed at 0.42 times, and the retail portion has been subscribed 0.97 times. We'll keep getting you updates on this one. But with that, we have run out of time on this edition of Midcap Radar. Stay tuned, your stocks when we return.